Hello everyone, welcome to Technical Analysis Workshop with Nimbus Capital. Today we are going to talk about Seng Index. So Hang Seng Index has been quite a disappointment for the year of 2021. You can see that the peak of Hang Seng Index was actually during the February of 2021, and in fact all we have been seeing are higher lows, and the chart continues to go down. So it is quite bad. We have all the China crackdown, we have Tencent dropping from its height, we have a lot of tech counter dropping left and right. So it has been quite a rough year for the Hong Kong market. Even for our Nimbus Capital Patreon trade setup, you can see from our data that Hong Kong have the least number of trade this year. In fact, we only have 18 close trade for Hong Kong with 9 win and 9 losses. So this year we do have a 50% winning rate on the Hong Kong market, and given the downtrend situation that Hong Kong is facing, being able to get 50% winning ratio, I will personally pat myself on the back, because at least we didn't lose anything, but at least we give it a go. So that's a bit of self consolation for our Hong Kong market performance this year. And there is a reason why you are seeing this 18 trade setup for Hong Kong for the entire year for Nimbus Capital. We have a total close trade of 117, but only 18 of them is from Hong Kong, which roughly equates to about 10%. We have the other 90% that are Singapore and US market trade. And in fact, if we look at all the trade setup, our last Hong Kong trade setup was way back in 12 July, China's Sun Tian, which fortunately we were able to have some profit. But ever since then, we do not really have Hong Kong trade setup. And that was a deliberate decision because of the fact that Hong Kong market is not really in the ideal state for trading. So let's take a look at a deeper dive into the Hang Seng Index itself before we conclude on what should we do with this Hong Kong market right now. So the first thing I like to do when I'm looking at a chart, I always like to zoom out, go to the highest time frame, get a big overall picture. Because if the overall picture is not uptrend, or it doesn't seem like something that is good for trading, then I will not be even wasting my time on looking at the smaller scale candles. So that's how you can pre-screen any index or any stock. So in this case, for Hang Seng Index, I am going to go to the monthly time frame, and you can see that on the monthly time frame, Hang Seng Index is kind of like in an uptrend. You can say it is like somewhat in an uptrend, but we will discuss this in much more detail. And let's compare the chart to S&P 500. So if you look at S&P 500, let's not talk about the very big growth or the uptrend of the S&P 500 itself, but take a look at the chart pattern itself. You will realize that S&P 500 is very clean in the sense that when it is going up, it is going up in one line. When it's coming down, it is coming down in one line. And after that, it continues to go up within one line. And only towards from 2018 to 2020, it became kind of volatile, noisy, a little bit noise. And after that, it continues with one line. So the price movement between 2018 and 2020 seems to be the exception. But aside from that, you will see that S&P 500 is very clean. When you have a clean chart like this, it is very easy to trade. You can simply place a long position anywhere along the line. Most of the time, you will be able to get a very good profit, unless, of course, if you happen to be unlucky and try to trade during this area where things are a little bit more volatile. But aside from that, region, every other point seems to be quite okay. But if we look at Hong Kong, you realize that the chart isn't very clean. It is very noisy. It's like the Spotify logo like that. It's like I don't know what's going on. It's very noisy. So when you have a very noisy chart like this, right, it's quite hard to trade because it'll be going up one moment and suddenly it will just come down and takes you out. So when you have a noisy chart, your tolerance have to be higher. Your tolerance for price retracement have to be a lot higher compared to the S&P 500, which also means to say that for S&P 500, if you take a trade, you can get away with a very tight stop loss. For example, if I make a trade here, I can actually place my stop loss here and I will not be stopped out and I will be able to get the whole trend. But if I do that kind of tight stop loss with, let's say, Hang Seng Index, if I place my entry right here and my stop loss right here, I will get stopped out during this sudden downtrend before it continues to go up. But even then, it challenged that stop loss once again in 2016. So Hang Seng Index overall is a much noisier chart and it is much harder to trade. Let's take a look at the higher low and the lower low, or the highs and the low of the Hang Seng Index itself. If you look at this, right, it is not really very healthy. For example, we have the high in 2008. After that, we have a low. After which we have a high. After which we have a high again. And then we have a low. And then we have another low. Then finally, we have a high, a low, somewhere in the middle and equal. So we do not consistently have a higher high chart that what you would normally see in an uptrend. So for example, this is a high, and then we have a higher high, and then next we have a higher high. So this example you see here is a very clean chart. It's a very clean chart that is easy to trade. But in the case of the Hang Seng Index, it's not so simple. The uptrend is not very obvious and it is not simple to trade, because instead of getting another higher high, you will be faced with a higher low and then you get caught in a downtrend and you might end up taking a stop loss on some of your trade. So once again, if we compare to the S&P 500, the higher highs are very clear. We have a high here, and then only during this period, maybe we have a little downtrend right here. But beyond that, we have a high, we have a higher high, we have another higher high, and every high is a higher high. You don't see a higher low that is being forming. Every high is a higher high, which is extremely different from the behavior of the Hang Seng Index. However, Hang Seng Index have one good thing going for it, which is if you look at the low, every low is actually a higher low. So at least we have that going. So let me point out the lows to you. I will, I think I'll keep the red arrows. So let's look at the first low right here. This is the beginning of the Hang Seng Index, after which we have the 2008 housing crisis, and then we have the great crude oil crisis, where we have crude oil dropping from $120 per barrel all the way to $20 per barrel. That was in 2015. And next, we have our COVID-19 at 2020. And finally, we are right here. This is our current state right now, 2021 October. So you can see that every point is a higher low. Or in fact, sorry, we even miss out this point here. So you can see that every point is a established higher low. So at least we got that one thing going for Hang Seng Index. I'd like to make something very clear also. It is not fair to assume that this current point is a established higher low, because it can still go down some more. It can still go down some more and then U-turn here, which will still make it a higher low, but it still have room to go down if it wants to. Okay, so based on this assumption, right? Based on this assumption, we can try to trade Hang Seng Index with the confidence that every low is a higher low. So now we want to draw a trend line. So let's draw a lower trend line for the Hang Seng Index. And you will realize that the trend line is not easy to draw for a chart that is extremely noisy like the Hang Seng Index itself. For example, if I can draw it this way, or I can like draw it this way. Yeah, I think this way is fine. So when you are drawing trend lines, the key thing is not to join as many points as possible, not to be too microscopic in the sense that you want to take it from the tail or the body, or you want to join all the points together, but rather trend line is more of a guideline, a gauge, rather than you have to be extremely accurate about it. Because trends are formed by human emotion, and human emotion is something unpredictable also. But within all these unpredictable variables, a trend is formed. Hence, what you have is not a very clear-cut trend line, but rather a bit of noise trend line, something like this. Okay, so that is what normally we will see in the market, and Hang Seng Index is a good example. So in this kind of situation, what I will do is I'll try to draw a best fit line. It might not touch any of the point, but I will ensure that all the lows are close to the line, a best fit line. Okay, so maybe something like this. Okay, I think this is like the best fit line that I can get. So I will consider this as my trend line. So now that we have established our lows and the trend line, let's dive a little bit deeper into the daily charts. Okay, so when we are looking at the daily charts, you can see that this is our last higher low that we have established. Meaning, if we want to assume that Hang Seng is still in an uptrend, we cannot have the price going below this last point. So I am going to put my support here. So this will be like my support, the last established support. But now we have another situation. We have a much more delicate situation, and that is this the next higher low? This is a question mark. Is this the next higher low? Because as I mentioned just now, this can or cannot be the highest low, may or may not be the highest low. In fact, price can continue to go down, and then it can bounce back before touching this support, and this point will still be a valid higher low. It is just that it is below this point. Okay, it is below this particular assumed higher low. So because of that, because of the fact that we cannot assume that this point you see here is a higher low, we cannot blindly buy into the Hang Seng Index as it currently is, because price is coming down, and in fact it can break this point and go down, because we have not established this point is a higher low yet. So as a trader, you do not want to be buying blindly into this point here. So the only time that you will want to buy into the Hang Seng Index is after the Hang Seng Index has established a higher low, meaning this point have to be confirmed guarantee chop higher low, or you wait for it to go down and it will create another point which is the higher low. So we need to wait for that to happen. So in order for this point you see right here to be established as a higher low, right? The short-term trend that you are seeing right now, this short-term downtrend that you are seeing right now, it needs to become an uptrend. The moment it becomes an uptrend, then we can establish, okay, this is the higher low already. Okay, so we must wait for this short-term downtrend to become an uptrend. So when does this short-term downtrend become an uptrend? That is when within this shorter time frame, we see a higher high. So we are talking about just the trend movement alone within the bigger time frame and then the shorter time frame. Okay, so within this shorter downtrend, we are just looking at this portion here from this top to currently right now. Okay, so we have the high right there at that point, which just now we have established, and then we have all the highs that we see here, which are somewhat equal. I wouldn't say higher low or higher low, sorry, higher low or lower. Sorry, I will not say a lower high or a higher high, but they are kind of like equal. These 3 points are kind of equal. So, but all the subsequent points are lower high. You will see all the lower high happening right here. Okay, you will see all the lower high happening right here. So this downtrend you see right here, it will only become an uptrend if we see a higher high, meaning price have to go beyond the last known high, meaning price must be at least somewhere here. But since we have this 3-point cluster right together, right, it will be much more convincing if the price is able to exceed all 3 highs. So I will be waiting for the price to go up to this point here, right here, maybe right here. Okay, so if the price is able to breach this level, go beyond the high of these 3 points that you see, then we can safely say that this downtrend has become an uptrend. And with that, we have also established this is now a higher low on the bigger time frame, and we can hope to see Hang Seng Index going further up. So with all that said, we have by chance or by coincidence, we have kind of come up with a trade plan for ourselves already. And that trade plan is we will buy the breakout above this line. We will buy the breakout above this resistance here. So this is the, if this is the resistance level, we will place our buy order somewhere right here, where the price is now above all these 3 resistance. And once we place our buy order right there, what we will do is we will place our stop loss below here, below this point here, because now we, per our analysis, we have determined that if the price breaks above the purple resistance, this point you see here at 24,000 price level has now become a higher low, meaning our stop loss need to be below this point, because as long as price remain above 24,000, our trade setup is still valid and we should hold our trade setup. So with this established trade setup, we are able to hopefully ride the Hang Seng Index as it continues to recover. So in terms of both long-term uptrend and the short-term uptrend, right, we are trading in both directions. We are not trying to bottom pick anymore, but we are getting the price somewhere close to the bottom at 24,000, but we do so in a smart manner. We do so in a calculated risk manner and not just simply blindly enter the stock. So that is how I will plan my trade setup for the Hang Seng Index. But once again, you need to ask yourself, do you really want to make this trade? Do you truly want to take this trade? Because if you have an index such as S&P 500, where the chart is extremely clean, all the highs are very clear higher high, and all the lows are very clear higher low, then it is much more easier to go for the S&P 500 trades rather than trying to go for a trade such as Hong Kong, because Hong Kong, as we mentioned before, it is a very noisy chart. It is not really a good, simple, nice uptrend like the S&P 500 itself. But of course, be it your own preference or whether is it something that you want to do for some reason, you still have to do it in a smart manner. And the outline of the trade setup is something that I will use as I have explained just now. So I will follow this trade setup if I am forced to trade Seng Index. Okay, so hopefully this analysis on Seng Index give you some insight on how to plan your trade setup with respect to the long-term trend and the short-term trend and the resistance and the support, and how you can convert all these analysis to a proper trade setup with a proper stop loss and a proper risk. If you are able to do this with all your charts, you can be very sure that you will be profitable in the long run. Okay, so thank you guys for tuning in. And as I am sharing the trade setup for our Nimbus Capital and our trade data that you see right here, right? For Nimbus Capital, we do have a subscription service where for a low $20 USD a month, you get to come to our weekly webinar. You get to look at more in-depth analysis videos such as something like this, but it is more exclusive. We'll be diving even deeper. We will utilize volume spread analysis a lot. So you will have access to all these Patreon only videos that will aid you a lot in your trading journey. And of course, you will have access to all the trade setup that we are taking as a trading group, because recently we have profited a lot on Netflix, Nvidia, Tesla. I think the current profit trend is we are hitting a bit of a winning streak. I can't remember most of the counter, the hourglass, of course. And I think counters such as Frankens and Grand Venture are about to go out. So these are all the trades that we have shared and we have entered in the past. So if you want to be part of this trading circle, and if you wish to receive all these additional exclusive information, do join our Patreon. It is a very small $20 a month fee. So the link to the Patreon will be in the description. And also, please help to like our YouTube video and subscribe to our YouTube channel, because it will allow us to make more free videos such as this if we are getting more views. As Nimbus Capital is still a small company and we are still growing, so subscription and likes on our YouTube video will help us a lot. Okay, so thank you very much for tuning in and have a nice day.